Welcome to the Invest for More Real Estate Podcast. My name is Mark Ferguson, and I am your host. I'm a house flipper. I flip 10 to 15 houses a year. I own 13 rental properties with a goal to buy 100 by 2023. I'm also a real estate agent. I've been licensed since '01. I run a team of 9. We sell close to 200 houses a year. So on this show, we like to interview house flippers, landlords, and the best real estate agents in the business. So stay tuned for some great shows. If you want more information on my rentals, on the numbers, how I buy properties, check out InvestFourMore.com.
Hey everyone, Mark Ferguson with InvestFourMore. Welcome to another episode of the InvestFourMore Real Estate Podcast. I am really excited today. I know I say that a lot, but today's special. I have an awesome guest on, Mark Filler, who is the CEO of Jordan Capital Finance, is on the show, and that is an incredible company for real estate investors, and we'll get into that later. But Mark, thank you so much for being on. I really appreciate you taking the time to be on the podcast.
Thank you. Thanks for having me.
Great. Well, I'll give a little bit of background on where you come from. Like I said, you're the current CEO of Jordan Capital Finance. You started out in the banking industry in 1994 as a co-founder of Prism Financial, which grew tremendously to a $275 million company. Then you ended up joining Home Mortgage Corporation, which was another giant company. Then you started Prospect Mortgage, which was an even bigger company and was one of the top 5 biggest mortgage companies in the country. I know Prospect very well as an REO agent because Fannie Mae would use many of their rehab products. Their home path loans went through Prospect many times. So you started that. And then you moved on to start Hilco Real Estate Finance, which was then acquired by the Garrison Group and changed to Jordan Capital Finance, which specializes in real estate investor loans. So you've been very busy in your career, to say the least.
Thank you. Yeah, it's been a lot of hard work.
Oh, I'm sure. And before that, you graduated from Harvard Law School and were with a national law firm as well. So you've been very busy. Very cool. So my first question, you started out, graduated from Harvard Law School, working with a law firm. What made you want to switch from that to get into the banking industry?
No, really just I was looking to do something more entrepreneurial, and a friend of mine somehow convinced me to start a mortgage company. And neither one, I didn't know anything about it. I didn't know anything about real estate or mortgages, but we decided to give it a try, and we got lucky, and it went super, super well. We grew the business really fast, really big, took it public, sold it to Royal Bank of Canada, and then I was kind of hooked.
Yes, I would say that would hook somebody. And then obviously you liked it because you kept starting or, stayed in the mortgage industry. What do you think drew you into the banking industry and kept you going that business?
I think originally it was literally just because a friend convinced me it was a good thing to try. But once I was into it, I kept thinking about, should I do this for the rest of my career? Because my background really was completely different than real estate and mortgages. So I had, there was other things I could do. But I guess I really liked it. And it's kind of where I knew the most about that compared to any other industry. And I had the most connections. And importantly, for one of the things that I do when I start businesses is you've got to be successful at raising money. And the way I do things, I don't like to start slow. I like to start and grow big real fast. And that means you got to be able to raise a lot of money. And for me, the way I was going to be most successful at raising money is to stay in an industry that I already had a track record and expertise.
Oh, that makes sense. And for real estate investors, growing money is obviously, or attracting money, getting investment money is obviously a huge aspect of growing real estate businesses as well. So I'm sure many people understand that. Would you compare getting money for the banking industry and starting a company like that to, say, real estate investors who are trying to get private money for flipping or rental properties? I mean, I'm sure it's obviously a much different scale you're dealing on, but I mean, is it all about relationships? What is it that really gets you in the door?
Yeah, it's funny. I wouldn't have really thought of that comparison, but it is. I guess at the core, it's about relationships. I raise money from people that I develop close partnership relationships with. It's about having a track record and expertise. I'm not saying all of our borrowers, but the vast majority of our borrowers have a track record in real estate investing, and so they have a lot of expertise. And obviously, we're able to provide a lot more money to people that have a good, strong track record, have been successful at what they're doing. So, and obviously, so if you're a brand new real estate investor and you've never done it before, it would kind of be like me going out and trying to raise money for an internet company, and probably no one would give me money. And if I did, it would be not very much money, and the terms would not be as advantageous. So we do lend money to people that have no experience, but we're very thoughtful and careful about when we do that, compared to somebody who has a good amount of experience.
Yeah, no, that makes perfect sense, and I've seen it all throughout my career and dealing with people. If you don't have experience, you don't have a track record, you better have a pretty good proposal and know the business very well and show that to a lender if you want to get any financing.
Yeah, some combination of that and having a relatively strong net worth and liquidity position.
Right, that makes perfect sense. And so you started the banking company, went on to another company, and you started Prospect Mortgage, which became one of the biggest mortgage companies in the country.
Yep.
What was that like, starting such a massive company and seeing it grow so fast? I mean,
well,
that must have been a whirlwind.
It was actually, to tell you the truth, it was very similar to when I started Prism Mortgage, and actually Prism Mortgage ended up being a little bigger than Prospect Mortgage. So I really had already done it before. So I was essentially 5 years of additional experience. So hopefully you make a few less mistakes than you made the first time around. That was the good news. The bad news is that I started Prospect Mortgage at the very, very beginning of '07, knowing that there was going to be some downturn in the market, which is one of the theses behind it, that we'd be able to buy mortgage companies at a discount. But I thought there was going to be a really small correction, nothing like the correction that we ended, the disaster that we ended up having. So for the first couple of years, it was brutal operating in the mortgage business, and it was literally you're just doing everything you can to survive. You're barely able to. It's difficult in that environment to really execute your strategy, and so it was much more survival than it was really a growth strategy mode. And then really at maybe kind of late in '09 is when we were able to stabilize the business and then start kind of embarking on the strategy that we originally planned and starting to think about growth instead of just thinking about survival.
Oh, wow. No, that makes sense. And that's obviously a tough time, yes, to be in the mortgage industry with all the guidelines changing, the housing industry crashing. But it says something that you survived and then became such a huge company. I know Prospect did a lot of specialization in renovation loans.
Yeah, so that was one of our main strategies was REO and renovation financing. And part of that is because we were based in Southern California, and obviously there was a lot of distress in REO. And part of it was also based on the fact that when IndyMac Bank went out of business, was thrown out of business by the FDIC, we took over their mortgage operation. So we had all these IndyMac REO properties and bad loans that we actually had to try to help finance. So one of the things we recognized early on was that this was going to be quite a huge market, a huge opportunity, a huge need in the market for REO and renovation financing. So we became, actually still to this day, Prospect is the number 2 renovation lender in the country after Wells Fargo. In terms of the primary product is the FHA 203K product, and then we were a real leader in the, as you mentioned, the Fannie Mae Home Path and the Fannie Mae Home Path renovation. So what happened is we gained tremendous expertise on a nationwide basis in REO and renovation financing, and that's really how I had the idea for this new mortgage company, what was Hilco and now Jordan. And so, because we kept getting requests to do this renovation and REO financing for investors, and as you know, the FHA 203K program, it's illegal for an investor to use that program. It's only for homeowners. And Fannie Mae had a very limited rehabilitation product for investors. So there was this huge need out there. Our real estate agents would constantly, ask us to help finance investors. Our loan officers would constantly help us finance investors, and we just didn't have the product. So I saw this need, and I already had the expertise on the renovation side. So I said, well, here's another opportunity to go out and start a new company based on the knowledge and expertise that we already had. So I was essentially we didn't have to recreate the wheel. We essentially just did the same thing, but we did it for investors instead of consumers.
Yeah, no, and that makes perfect sense. And I know from being in the industry, there's very little options out there for investors, especially the rehab area. Things have gotten different the last few years, but a few years ago, there's almost no options for investors. It was put 20% down at a minimum, and then you get to pay for all your repairs yourself. So it's definitely a changing industry as far as that goes.
Yeah, it's changed. This industry's changed a lot in the last 18 months or so. It's gotten a lot more competitive. It's gotten better for the investor borrower. They can find options with slightly lower down payments, slightly higher LTVs, slightly lower pricing, slightly more flexible terms. There's just because of competition and a lot of money out there, investors are kind of in the driver's seat a whole lot more than they were 2 years ago.
Right. No, for sure. I've seen that myself. And yes, I am personally looking at refinancing some of my rental properties with Jordan Capital Finance, so I have a personal involvement in this as well. And those options weren't available a couple of years ago. It was, maybe a local lender could help you out once you got to a certain amount of mortgages. Once you have 10 mortgages in your name, basically conventional lending is completely out the door. So it made it tough for investors to really, increase their portfolio in the previous lending market.
You're completely right. It was the whole that whole market now of these longer term portfolio rental loans. It's a brand new market. It's a brand new asset class that barely existed 2 years ago.
Right. Yep. It's funny. Before I started my blog, I started my site in March of 2013, and I was kind of researching before I did that new business ventures I could do, what I was good at, and my first thought that popped into my head was, I'll just start a bank that lends to investors. Obviously, I had no experience and no idea what I was doing, but that fishtailed into the blog and talking about different options instead of starting it myself. So
I hear you.
Did it.
Yeah. Because there's really in our industry, even though it's become a lot more competitive and there are a lot of competitors out there, there's really only about a handful of competitors out there like us that are really, really well capitalized and can lend a lot of money on a reliable, consistent basis and do it in many states. There's a lot of tons of small local competitors, but they run a lot of times they run out of money, or they can only do certain loan types, or they can only do smaller loans. It's because in our industry, really no different than pretty much any industry, it's there's not a lot of companies out there, not a lot of people out there that are able to really raise a lot of money. And that's one of the things that we've been lucky. We have raised a ton of money, and we essentially have unlimited lending capabilities between our equity investor, and we have several lines of credit from banks like Wells Fargo and hedge funds and things like that. So at the very end of 2014, we sold our business from Hilco to Garrison Partners, and we did that primarily because we wanted a lot more money to grow bigger and faster. And so really in 2015, our number one priority was to become a one-stop shop for a residential real estate investor. I wanted to be able to have every product possible, short-term, long-term, big, small, single family, multifamily, new construction, experienced borrowers, less experienced borrowers, full documentation programs, lower documentation programs, high LTV, low LTV. So we really wanted to be a one-stop shop and so that we could say that if there's any residential real estate investor and the deal makes sense, we'll be able to finance it, and that hugely sets us apart from 99% of our competition because other firms have more limited product ranges.
Right. No, that makes sense. I want to talk about a lot of that later on. I have one particular program you guys have that's very interesting to me. But you said something really interesting about the local, hard money type lender, the ones who are state specific. And I have a great story about showing how limited some of those are. I'm REO agent and REO real estate agent, so I work with HUD and some other companies. And as an agent, I see all kinds of interesting things come up. We had one house under contract as the listing agent. The buyer was using a hard money lender. And HUD, they want to see a proof of funds letter that shows you have the money in the bank to buy this house. And they provided the letter from the hard money lender that showed, we're a hard money lender, we're providing the money to the buyers, all this. And the HUD says, no, we have to see, you're not an accredited lender, you're not, mortgage company. We need to see the money in your account. Well, that hard money lender did not have the money in their account. They went to another hard money lender and had them show money in their account and a letter saying this hard money lender would lend it to this hard money lender. It was just a crazy situation and shows, those companies aren't as stable as they may appear to be.
Yeah, no, it's exactly right. So one of our primary core product is we offer lines of credit to investors. So what we'll do is we'll go through a borrower approval before they even have a property or when they have their first property. And based on their track record, their liquidity, their credit, some other things, we'll say, okay, well, we can lend you borrower up to X amount of dollars. Like a very common amount would be $1 million. We have lines of credit anywhere from $200,000 to $7.5 million. So if you think about it, almost none of our competitors can do what I'm talking about because of the example that you just gave. No one has. There's only a handful of people in the country who have enough money to tell hundreds of borrowers out there that whenever you need money, we'll be here because we have enough money. We don't have to go out and raise it. And that way we give a letter to our borrower that says you've been approved for, $1 million or $2 million or $500,000 or $5 million, whatever the number is, and that's a letter that they can show to HUD or Fannie.
Right. Nope. That makes a big difference between the local hard money lenders and a national company that's backed by a $4 billion fund.
$5 billion. They grew.
$5 billion now? Okay. Yeah. Quite a bit of money backing. Yep.
Yeah. Exactly.
Very cool. So now you mentioned you have multiple different programs for different investors. Can you tell us more about, you have the short-term financing, you have long-term financing. What different programs do you offer investors?
So, well, our primary product is a 9 to 12 month loan, and it involves acquisition and renovation. About 2/3 of our borrowers actually borrow rehab funds from us, and I would say that is a core competency of ours and something that we're really, really good at is doing construction draws and doing them fast, so that when people want rehab money, we can lend against that very easily. And then so about two out of three of our borrowers flip the property, and about 1 out of 3 of them hold them for rental. And in those cases, we also do the long-term rental loans. We have 5, 10, and 30-year rental loans. We have single property and multi-property rental loans. And we do, in terms of the lending, again, we do 1 to 4 property units. Buildings is definitely our core, but we do a lot between 5 and 30 units as well. Just in the last 6 months, we've done a lot of ground-up new construction, so we do not finance land development, but we will finance as soon as they're ready to build. We'll cash out some of the land value and also do the construction financing on new construction. And I know that's something that Most of our competitors are not set up to do new construction. And, we have a lot. Most of our borrowers want to go for a full underwrite, get a line of credit, and that way, because they've already been approved as a borrower, we can close on their deals in a week because all we have to do then is get an appraisal and an inspection. Some of our borrowers don't want to go through as as strenuous or full a documentation review. And so in those cases, we can do a lower touch, less detailed underwrite of the borrower. And then in return for that, we can't offer the long-term line of credit because we don't know enough about the borrower to be able to have a long-term partnership like that, where we can already tell them up front how much money we'll give them. But so some of the people say, hey, I don't want to go through a difficult underwriting process. So maybe I'll try you with one loan. And then if it works out, we can enter into a longer-term relationship line of credit. In return for not having a full underwrite, we require a little extra down payment to give us some security because we don't know the borrower as well as we do if we fully underwrite for a line of credit.
Right, that makes sense. So what do you think, the down payments, I know it's different on different properties, but what do you think a typical down payment for someone who goes through the full underwrite processes on those short-term loans?
Our most common down payment is 20%. We have products ranging anywhere from 10% down payment to 35% down payment.
And then you'll finance renovation as well.
It really depends on the borrower and the overall situation. We can size that up very, very quickly for a borrower. We can tell them here's what it takes to get a 10% down payment. Here's what it takes to get a 20, 30, 35. Here's the different terms. It's not really, and it's less price. It's not so much about pricing. It's more about the documentation and the strength of the borrower.
Right. Nope, that makes sense. One interesting technique that I was talking to with your company about was the possibility of using a short-term loan to help the renovation costs on a longer-term loan. So from what I understood, you could do the short-term loan, renovate the property, and then move it into a longer-term loan so that you're not, having to finance all the renovation yourself and the down payment. How does that work?
That's a core that we love doing that. So we would do it. It'd be a traditional short-term loan, and then once you have the property renovated and leased, we do have to have a new loan set up. But we have obviously a lot of your information so that as soon as the property is leased up and the renovation is over, we can offer a long-term loan, again, anywhere from 5, 10, or 30-year products, depending on the borrower's individual desires.
Right. And that's
again where we were not doing the long-term loans. And we realized, again, kind of our philosophy is we want to be a one-stop shop. We don't want somebody to have to say, okay, well, on certain types of loans, I'll use Jordan, and on other types of loans, I'll use a competitor. We want you to know that no matter what type of property you have, no matter what type of documentation you have, no matter what type of loan you want, that you have a relationship with us. We are definitely about relationships and about long-term relationships. We've never, ever foreclosed on a property. We've never taken back a property because we're here to partner with our investors and have relationships. We know that things are going to go wrong. You're going to have a bad winter, or you're going to have, it's going to take longer than you expect to sell the property, or your budget was a little different than it turned out to be. Different things are just going to go wrong in the process, and we're there to work through things with our borrowers and never to try to own the property ourselves. We're lenders. We don't want to own your property.
Right, and that makes sense. And if you've been in the business a little bit, you do hear stories about certain lenders who might underwrite properties thinking, hey, we can get this, we don't know, this borrower may not be that strong, but hey, if we buy the property, that's an even better deal later on. So, but that's good to hear. And I will say one more thing too, because I've done a lot of research myself on some of the bigger lending companies in your niche for my own personal investments. And you guys have had the most flexible, the most options out of any of them. A lot of those companies, you have to have at least 5 properties if you want to do a long-term rental property loan. A lot of them won't do any multifamilies at all. Many of them don't do the short-term loans. They only do long-term loans. So you're right. It is rare, very rare to see a company that does as many things as you guys do.
Yeah, I think I think a thing that we kind of specialize in is we really want to have the service levels and the relationship philosophy of the more local, smaller lenders with less bureaucracy, so that you can get quick, accurate decisions and you can actually speak to a decision maker. And you can't really do that at some of the large institutional firms. But I think we have kind of the best of all worlds. We have as much money and as much expertise and experience as the really big players, but we are, I think, significantly more entrepreneurial, less bureaucratic, and more transparent than some of the largest competitors.
Right, and I would agree with that too. Some of those companies would not even call or email me back, so it was a little tough to see what they offered.
Good for us. Good for us.
Right. Very cool. Well, yeah, like I said, I've been in the process now of refinancing 8 of my properties with you guys because of your products. And one huge advantage you have is you have you can finance more than 10 properties if you have 10 mortgages in your name. You guys don't have any restrictions on that. You don't have the restrictions that a conventional lender will have, and you have more money than, say, a local portfolio lender might have, so you might not have restrictions on, how much dollar amount in loans you can have as well, correct?
Exactly. That's right.
So,
we can go, we can offer very large loans, and we really are in no way limited by capital or money. We have our partner is a $5 billion equity investor. So between them and the debt financing that we have, we can do tons of loans. That's the least money. Having enough money is literally the least of our issues.
Right. That's a good problem to have.
Yeah.
Very cool. Well, switching gears a little bit. I love to talk about investing and financing and everything, but I also love to talk about success and how people have become successful in their life. Obviously, you've done an incredible amount in your career. What do you think, if you could give somebody one tip for just being successful in life, what do you suggest people do?
Oh, that's a good one. I don't know if I can just give one. I would.
You can give more if you like.
You got to be able to work really hard, and you got to be able to attract and retain the A-team. So I personally think that one of my most important jobs is to find, attract, and retain the most talented people in the industry. And that's something that I have been very fortunate at having done. I will if I have to fill a particular job position, particularly if it's a mid to senior level person, I will just obsess over leaving no stone unturned. I will do everything humanly possible to find the best people, and then once we have those people on board, it's like you got to re-recruit them every day because they're really talented. They all have lots of options, and you gotta challenge them. You gotta treat them fairly. You gotta give them a lot of autonomy, and you gotta give them a lot of incentive-based compensation. So if you if you create the right culture, and you have the right people, and then you combine that with hard work, and again, one of the things I've been really lucky is I've been able to raise a ton of money. So if you think about just real quick, you work really hard, you get a ton of money, and you get the A-team, and that's really been kind of my secret sauce.
No, that's great. I'm curious, for somebody who's, let's say they're very young or they're just starting out, nowhere close to being able to, start a massive company or anything, but they have huge dreams and really want to make something big. What's kind of do you think going to, college and taking the Harvard route, is that a good way to start? Is there a way to shortcut it, or how do you feel about the higher level education
I'm
side?
biased. So, one thing I wanted to add to kind of what I said is the secret sauce. You always got to treat people fairly and with respect, no matter what. No matter what. For me, I'm biased, right? So I was lucky, and I was able to go the Harvard route. And certainly, there are situations in life where that has made my career easier, because you kind of have some instant credibility, and you have a lot of good relationships and contacts. But so I'd say that's maybe an easier route. But there's tons and tons of people out there that are really successful that have just that haven't gone to Harvard and have been equally and a lot people that have been a ton more successful than I have. But I always say go to the best school you possibly can, because you're gonna learn the most, you're gonna get challenged the most, and you're gonna meet the smartest people. And working in an environment with the smartest people, to me, is always really it's a great opportunity. You're going to learn more from the smartest, hardest working people. It doesn't have to be, I don't mean just academically successful people, just smart people in whatever they do. But certainly you don't have to go to the best colleges in order to end up there.
Right. And I've always heard from people who when you go to the really prestigious schools, it's not all about what they teach you, it's about who you meet there and who you connect with, who can help you later on in life.
Couldn't agree more. I read. I'm sure I had the same, law book as people that didn't go to Harvard, and I probably didn't learn any more than most of my counterparts at other law schools in the country. But I was challenged by some obviously brilliant professors, brilliant other students. So it really challenges your mind, your intelligence, and your work ethic when you're in such a competitive environment.
Right, that makes sense. I would imagine for people who can't go to Harvard, which is obviously very difficult for many people, that doesn't mean you can't seek out people wherever you can go, or even outside of school who are successful, who will challenge you, who are very smart, and then they can help you succeed even more and challenge you as well.
Oh, yeah, for sure. Yeah. I would just say, like, anybody who has an opportunity, it doesn't matter whether the person ever graduated from high school. Anytime you have an opportunity to network with and learn from and learn with really smart, successful, motivated people, I would always, utilize that opportunity for sure.
Right. No, I try to do that in my life as well. And every time I try and meet people at a higher level, it's kind of like, hey, I can do that. It's not as difficult as it seems once you see what they do, and they're just normal people. So it's really,
for sure.
Great advice.
And that's what, again, I use that in my hiring philosophy. I try to hire. I mean, I literally obsess over trying to hire the best, smartest, hardest working people I can find, because that's how I'm going to get better. That's how the company's going to get better. That's how the rest of the team's going to get better, et cetera.
Oh, that's great stuff. Very great advice. Awesome. And then one last thing I wanted to ask you. We're getting closer to the end, but you mentioned to me you invest a little bit in real estate yourself. So what do your real estate investments look like?
Oh, I've made, when somebody will come to us with, it's got to be just a really, really kind of safe opportunity, because I just don't have the time to really focus on it. So I would only do it in partnership with somebody who, it's a pretty safe. I'm not a big risk taker on the real estate side, because I already have so much exposure between my real estate investments and being in the mortgage business. I'm already kind of so long real estate in general that I don't go out and find real risky real estate projects. So it's got to be the right partner who's really going to lead the project, because I don't personally have the time. And we've been successful. So I pick and choose very selectively. I don't have any real need to do a lot of real estate investing. So I only do it when the opportunity is right with the right people. I'm I'm fairly long just in terms of personal real estate that I currently own. So I'm pretty picky what I do as an investor.
Yeah, no, that makes sense. And brings up another point where you don't have to be a jack of all trades to be successful. Focus is also something that you need to be really successful in the world, and trying to do too many things at once can make it tough to succeed.
Yeah, I'm really a lender. I do love real estate for sure, and I've done my share of real estate investing, but I'm better at lending than I am at being a real estate investor.
Great. No, that makes perfect sense. Very cool. Well, I think that is all I had for you. Anything else you want to add before I give people, how to get in contact with Jordan Capital, or anything else you want to add?
No, just obviously we'd love to help anybody and answer any questions, anything we can do to help real estate investors, and also we work very actively with referral sources. So if people are out there and they know real estate investors, we enter into referral partnerships with lots of different types of entities and companies and people. So we'd love to hear from you.
Great. No, very good stuff. Yep. So it's jordancapitalfinance.com is your website. And then I always do a write-up on these podcasts as well. So I'll provide a link to actually the person I've been working with. Jeff has been really great to work with. It's really been easy to talk with him and get information. So love working with you guys.
He's awesome. He's super knowledgeable, great guy, really knows his stuff. Highly and great customer service, so I couldn't recommend anybody more.
Right, and I think might be an email junkie like me, because he responds to my emails in about 2 minutes every time.
I do notice that.
Very good. All right, well, thank you so much for being on the show, Mark. Really appreciate it. Learned a lot of great stuff myself. I'm sure you've taught a lot of other people, and you guys have really created a new option for investors, which was seriously lacking in the industry a couple of years ago. So I think we all appreciate that.
Appreciate your time and support. Thank you.
All right. Thank you, Mark. Have a great rest of the week.
Great. Thanks a lot.